What's up everyone? So today we're going to be doing a starter guide on forex trading for beginners, how to essentially get started with zero experience. This video was originally created because I had a lot of questions from people saying, how do I start, where do I go, what broker do I use, or it just seemed a little bit overcomplicated for a lot of people who've never really come into trading before. So I wanted to create this video for the purpose of, if somebody asks me, I can just refer them to this video, but more importantly, it will basically answer most of the questions that you need answered before you start. If there is any questions that weren't really answered in this video, feel free to drop a comment in below and I'll probably likely answer it. And if you were wondering about the question, check the comments first, and if it was something that was really important and I missed it by any chance, I'll pin it, so it'll be at the top comments. So, introduction to Forex. I think when it comes down to Forex, it's mostly about just understanding what Forex actually means, and it's foreign exchange. For most people, the goal is profiting from the fluctuations of the exchange rates. So you're basically buying and selling from various different currency pairs. The interesting thing about trading Forex is you've got the benefit of something called double-sided trading, where essentially you can make money whilst the price is going up, and you can make money while the price is going down. The good thing about this is that you don't have to be always waiting for the price to hit a significant level in order for you to make money. You can make money in hundreds and hundreds of different ways, if not thousands of different profitable ways to make money in the market. You can even make money in the wrong way. Firstly, starting off, you'd want to know the definition of trading, as we mentioned, the foreign exchange market. It's basically buying and selling currency pairs in the global marketplace. You've got the benefit of double-sided trading, so you can buy and sell. You can even do it equally at the same time. That's something called hedging. And then an added bonus to it is the market's open 24 hours from Monday to Friday. So the great thing about this is you can make money even when you're sleeping. You can make money essentially off the bat of just buying and selling, and you're basically making the money off the fluctuations of price. One of the best bonuses of this is you can make money on the fluctuations without having to be significantly affected by the price moving. What I mean by that is, if you're buying or selling, let's say Euro USD, and the price moves significantly, where the actual currency rate, the exchange rate, wouldn't change significantly, but you can profit an extremely large amount depending on the account size that you have. So these are some of the bonuses of actually trading in the Forex market. When you are trading the Forex market, this is just an example of some of the major pairs here, and there is minor pairs as well, which are included in here, and then we have exotic pairs, where you can trade things like the Turkish lira, the South African rand, the Mexican currencies and so forth, Polish zloty. So what you want to do originally is just understand what currency pairs and what they actually mean. So primarily you have the Australian dollar, the Canadian dollar, the Swiss franc, the euro, the Great British pound, New Zealand dollar, and the US dollar. And then you have the counter pairs, which are like the Japanese yen and so forth. When you're looking at these, you're essentially trading the base currency, which is, in this case, if we're looking at Euro USD, the base currency would be the euro. What that means is that if you're buying or selling, you're selling the euro against whatever the other currency is, the counter currency. So in this case, we're trading Euro USD. So that means if I buy the Euro USD, I'm buying the euro against the US dollar. So I'm anticipating the euro to go up. If I'm anticipating the US dollar to go up, then we may see pairs like USD CAD, USD Swiss, and USD Yen go to the upside, whilst we'll see as a counter effect a pair like the Euro USD go down. Why? Because the US dollar is getting stronger and the euro is getting weaker. And that's a basic concept of basically trading these pairs. They work in correlation with many different pairs. Now, something to bear in mind as you do delve a little bit deeper into trading these pairs is that some of these are cross-correlated. As you can see, there's quite a large sum of euro pairs here. What if the Aussie pair's going up? Does that mean the euro pair's going down and the other euro pairs? Not necessarily. It just means that this particular pair, we're going to see the Aussie appreciating, so we may see pairs like these Aussie pairs move to the upside, whilst the other euro pairs are moving to the upside as well. We may see sideways price action, or we may see the euro still moving higher whilst the other Aussie pairs are moving higher, and then this one potentially goes lower. That's why we don't trade them all in correlation with each other's. We have to be aware of each individual one and understand what the market fluctuations are. Now, there is some pairs that do move well together and work against each other, but again, that's something that you will learn when you start studying these particular instruments. We do have other instruments in here as well. We don't have to just be trading currencies, even though it's the foreign exchange market, CFDs, contract for differences, whatever choice you make in terms of trading. Just understand that you can trade things like gold, silver, and these are the commodities, some of the commodities. And you can also trade indices as well, which is the economies of them. So you have things like the DXY, which usually isn't tradable amongst a lot of brokers, but you'll have things like the Australian 200, the Japanese 225, which is essentially the top 225 companies. You have the S&P 500, which is the top 500 US performing companies. You have the NASDAQ, and loads of different other indice pairs you can trade. The main question a lot of people will be having is reliable broker. How do I know which broker to go with because there's so many? Now, it's an extremely important question to be asking, and it's a very good question, and it really comes down to mainly regulation. If you're going to be investing your money somewhere, you want to make sure that your money's protected to an extent. And it's not to say that these companies can't go bust, but the likelihood of some of the biggest companies out there going bust is very, very low, and your money is usually protected up to a certain amount. So what I would really suggest is, firstly, and it's a regulation where they actually have to display their regulation on their website, but not only when they display it, they have to use a hyperlink which takes you to the governmental website. So just as an example, you'll see something like FCA, you'll see something more on the lines of CFA and things like that, where it will have the regulation of it, and then they'll have their regulation number. But more importantly, rather than just trusting what's on the website, you should go off and check on the broker's website, and then go onto the regulatory body's website, and then they will have a section on there where you can search and you can check if the broker is regulated. I highly recommend, if the broker is not regulated, then to avoid them. It just leaves less room for you losing your money, because yes, this is an industry where there's a lot of money, and when there's a lot of money, there's usually a lot of scammers. So you want to be careful when you are picking them, but the best way to feel protected and be reassured that you're with a legitimate regulated company is to check on the authority's website, which will then allow you to see that yes, they are regulated. And remember this, right? Not everybody can get regulated. They have to be vetted, they have to pay a substantially large fee, and they have to meet compliance regulations. So going with a regulated company does give you the reassurance that most of us need. The second one is platform. So really and truly, platform comes down to personal preference, and I'm not going to tell you which platform to go with, but the most generic one used for a very long time is MetaTrader 4 and 5. Are they the best platforms out there? Probably not. Do they do the job? Absolutely. And The reason I say that is, again, it's the standard for the industry that a lot of them have the MetaTrader platforms. However, if they don't have it, it's not the end of the world. Most likely they will have another platform, but at the end of the day, it's just something you have to bear in mind, that different companies have different platforms. Sometimes they have their own internal platform. The main thing about it is, if they have their internal platform, the best thing you can do is probably just test the platform, get to grips with it, and see if it's something that you enjoy using, if it's something that you can see yourself actually actively using. Because if it seems a bit buggy and has a lot of glitches and problems, then most likely it's worth avoiding using that platform, because it's going to disrupt your learning experience, and also it's going to stunt your growth. A platform I would highly recommend is TradingView. Now, they do offer trading capabilities on there, and they do have a list of regulated brokers, and I have got it in my description of the video. TradingView is the one, TradingView.com. TradingView is a phenomenal trading platform, has a lot of tools. If you want to explore indicators and so forth, it's a very, very good place to just start analyzing and learning that stuff, and it's completely free. There is a paid version for it as well if you want it, but it's not necessary. And last but not least is fees. Fees is extremely important. I think for a lot of traders, they don't really know what's expensive and what's not expensive when they start trading. So again, this comes with experience and time. When you go for the more popular brokers, the ones that a lot of people are using, like FXCM, Oanda, you will then notice that the fees are pretty standard and not extortionate. Some odd brokers, they can put really large fees. That comes into something like spreads, overnight holding fees, and so forth. And essentially, you want to be careful with that, because it can affect your profits. So again, when it comes to trading, fees is another important topic to just not to overlook, but just to do some research around it, just to ensure that you've compared your fees across multiple brokers. So summarizing this, make sure they're regulated, make sure the platform is user friendly, and the fees around it. And a great thing to do is perhaps maybe find 2 or 3 options that are available for yourself, and then out of those 2-3 options, just spend a bit of time and compare them. A rush decision is never a good decision, so it's always good to take out the time. You can even probably speak to them. You can check online for a comparison check as well, and you'll probably come to a very good conclusion of which broker you're going to use. But the most important part of all of this here is to ensure that they're regulated. The next part here is awareness of social media gurus. Now, this is one that is probably one of the biggest topics for a lot of people, because it's one of the topics that a lot of people get put off by trading because of the social media gurus. Now, from my personal experience, I didn't fall into a trap of any of them. However, I know that there's a lot of people that, perhaps went for some sort of signal service, or they just thought it'd be a great idea to, kind of see it as fast money, because what you can see in this image here is they're all flaunting cash. And I'll be honest with you, right, it's kind of giving you the false imaging of trading, because trading is more than just, clicking a few buttons and making a bit of money. Really and truly, there's a lot of work that goes in the background. There's a lot of, hard work, dedication, and really and truly, if your trading mentors are not really showing you that, then you need to really kind of think about the person who's teaching you, because again, a lot of the time, this is not the sort of ideal mentor that you need. Somebody who's just going to talk about fast cars and all of this stuff. Like, yes, that's an aspect of making money, but more importantly, it's not something that you need to be having on your mind, because it's going to lead to some emotional decisions that you'll be making further on, which you don't need. What you do need to be understanding is I'm trying to find a sustainable way that I can make money long term, and I need to find somebody that's going to be able to guide me and teach me to do that. Not somebody who's going to start programming me with the idea that the more trades I open, the more money I'm going to make, and so forth. Because really and truly, you could open up 4 or 5 trades in a year and still make over 100,000 a year. So something I just wanted to point out and make very clear: avoid social media gurus, do your research. If they're backed with a community, it's even better. It's always better to always reach out and speak to people, do your research, look online, read the reviews, speak to some people who might be trading a particular strategy, and take it from there. But then again, sometimes even when you do that, you could still fall in the trap of falling under these. So look, I'm somebody who does trade. If you do come across a course that you're really interested in and you put a comment below, I will be more than happy to check them myself and basically just see if I can see that this is a legitimate source or not. But truth behind it is, you know, there's a lot of these gurus out there that are just marketing scammers. So you have to be very, very careful, especially with some of the content you watch online these days. It's not a case that they may not be making money, but they may not be making money in a sustainable long-term way that could benefit you in the way that most people want to be. A lot of people here work a full-time job. A lot of people, you know, they don't want to spend their whole life just sitting by a computer. They want to literally be free and be able to make money. There's many ways you can do that. There's not just one strategy in the market. There's loads of different strategies. You just need to find an area or a way that you want to trade, and then from that you can then establish the sort of area, the sort of style of trading that you want. But before you've even began trading, you're not going to know the variations of this. So again, as I mentioned, the most important thing is to do your research and take your time with it. Don't just go and give some random guy Fred your cash and then expect him to teach you everything. It doesn't always work like that. Credibility goes a long way, and reviews and so forth, people who are posting videos about the trading course, things like that. If you get a recommendation from someone that you know personally, it's also very good. But at the end of the day, as I said, you need to be very careful in this industry when you are trying to look for a mentor, because it's not always the easiest to find somebody who actually knows what they're talking about. The next point is risk management. I think this is one of the most important topics when it comes to trading, because when you see yourself as a trader, you shouldn't be seeing yourself as just a trader. You should be seeing yourself as a risk manager. Here's some ways that as a trader you can mitigate against risk, and that's the main purpose here, is that you're seeing, when I'm taking a trading position, when I'm making an investment, how can I mitigate the risk of losing money? Now, losing money is a part of the process. In order to make money, you do need to lose a little bit of money here and there. But very key detail there, a little bit of money, right? You're not risking 10, 20, 30% of your portfolio to make, you know, 10, 20, 30%. You want to be risking a very small percentage. And from my experience, understanding why risking a small percentage to make a large percentage, or cumulatively a stack of, you know, 3, 4, 5% will grow. The way I see it is, if you have, let's say, £100,000, most of you here probably don't have 100,000, but if you did, which is very easy to obtain when you have the skill, right? And that goes into funding and things like that, which is a complete different topic. But obtaining capital once you have the skill is actually not a difficult thing, because you become an asset at that point. The most important thing here is that you can manage risk really well. So let's say I gave you £100,000 and you had the ability to trade, and I said to you, I don't want to lose more than 10,000 on my account, but I want to see at least 20,000 a year. So I'm asking for a 20% gain, and I'm saying you have a 10% loss limit. If you lose 10%, I want my 90k back, and we're done. If you make 20%, I'll take 20%. Everything you make on top is yours, just as an example. So how this will work now is, you need to now think in terms of risk management. Even if it was your own capital, you're not going to feel great if you lost 20,000 of your own money and you only had 100,000. So you're going to have to lower your risk. But understand it this way: if you're risking, let's say you've got 100,000 and you're risking 500 off that per trade, but your earning potential per trade is between 1,500 to, call it, 5,000. Now on a sequence of trades, you take 4 losses at $500. That puts you at around about 2,000 loss off your 100,000, so you're at 98,000. But then you take a winner, and that one winner banked you 3,500, or even 2,000, or 1,000. Doesn't matter. But the sequence of winners to losers, because you've built an edge and you understand how to trade and you're able to mitigate against risk, even though you took 4 consecutive losses at $500, you only lost 2,000. But when you did get a winning trade, the winning trade then substantially moved forward. What you need to understand here is that it's less about being perfect, because that is where you're going to go later. You're going to get to your peak performance, but it's more about understanding the probabilities here. You've built an edge. You know that, let's say, 3 a minimum out of 10 times you'll make money. Now the odds there are not too great, but when you do make money, you make big money, right? So and even if it's the case of 50-50, right, 50% of the time you make money, 50% of the time you will lose money. The difference here is that you have a 3-to-1 or 5-to-1 as a minimum. So even if you lost 5 consecutive trades, when you do win, you've got a 5-to-1 on average. So you just need 2 winning trades compared to the 5 losers, and you would have doubled what you would have lost, essentially. And the reason why I'm saying that is when you learn to manage risk really well, you can take 5 you can make 5 trades which don't turn out to be on the probabilistic side of you winning, but then you take a sequence of 2 winners and suddenly you're in a big winning position, right? And each winner essentially will put you in a position to take 5 more trades, just as an example. So when it comes down to risk management, it's a very important topic. And the great thing about it is it's not just about thinking in probabilities, it's about understanding how can I mitigate against the risk. And there's a whole bunch of tools for that. You have something called a stop loss, you have a take profit, you have you can use position size calculators as well, which then help you reduce the risk of making a bad decision. You can trade with 0.5%, and you can calculate that really quickly without having to be a maths genius. You can use a risk reward calculator. Trailing your stops. So one method you could do is, trail your stops every, X amount of pips, locking in a certain amount of percentage, following structures depending how you're trading, or following your indicator or EMAs or whatever. You can trail your stops, always locking in some profits, knowing where to be more aggressive, and the diversification of this. You can spread your investment. You don't have to put a fixed 0.5% risk on a trade. You can split that between 2 high probability trades that are shaping up, and you can take 0.25 and 0.25 on that, and then if one gets taken out and the other one moves to like 6%, you still make a significantly large profit. So there's the flexibility of that. Trade journaling, so you can track your trades to see the outcomes, and then you can improve your decision making, your emotional resilience to certain things. You can use indicators. I don't use indicators much, but it's there. And then you can use particular softwares out there. Now I know that the industry is growing massively. Again, that requires you to do your own personal research, but I know that there is some softwares out there that help you do the trade journaling, and then it gives you certain statistics that will help you notice certain patterns in your behavior that will help for you to then work on that. But really and truly, most things you can do manually, it just requires more work. Common mistakes to avoid. Now, these are things that essentially, as a beginner, when I really thought about it and I looked over some of the stuff that happened for me, I kind of just put these in as a summary. So over trading in a short period of time, you get excited, you think you're going to make money, it's going to push you closer to your goals, you've just learned something, you want to start implementing it. By over trading, you push yourself further back, you get more emotional, and it's more damaging, because at the beginning, a lot of people, a huge percentage of people, treat trading like gambling, but they don't realize it. They think they're investing, and they keep telling themselves that, which could be ego, and they don't move very far forward. You need to be learning. The lack of a trading plan is the other one. Remember this, right? If you're going to go do something, at least plan for it. Build a solid plan from data you've collected to enable you to then have a thesis when you're doing something, so it's replicatable, sustainable, and you can move forward with it. Ignoring risk management. So if you say you're going to stick with 0.5% or 0.2% risk, stick with that risk. Don't be making risk too flexible, because when you get emotional, because your risk is flexible, you might emotionally increase your risk because you're over trading, or you're in a chasing losses mindset, and you don't want to chase losses with a higher risk, right? You want to be trading in a calm, collected, focused mindset with a proper plan. And then if you do make the mistake of taking a trade, then you look at it and you're like, oh, I didn't follow my trading plan. And then you go back to it, and then you realize that it was because you didn't follow your plan. And then you can make sure that the next trade you take, you follow your plan. And then if the trades are still losing, then you need to tweak the plan, and then improve it until eventually you build a very sustainable long-term working strategy. Emotional trading. As mentioned, fear, greed, excitement, all of these things, they can creep in. You've just made your first £1,000, $1,000. You're now feeling euphoric and excited. That can also really affect yourself. So you have to be very self-aware about the emotions you're feeling, and then how that's also working with you making decisions, because your emotions can lead to your decision making. So it's something to be very aware of. Having an emotional journal is a very good way to track this, so that when you're taking trades, you're also tracking your emotions whilst you're doing it, and then you can also go back and look at the patterns in your behavior. Neglecting market research. I think doing a proper analysis and doing your research to stay informed is very important. If you're neglecting it and you're losing money again, this is something that a lot of traders don't do. They don't even do their market research. They kind of just go off intuition. And what intuition? You haven't been trading long enough to have a proper intuition. So you need to do proper research and build a understanding of what you're looking for and how you're trading, and that's going to help you move forward. Not having a trading journal. I think this is one of the most common things with new traders. How do you learn if you don't track, right? How do you know that you're improving? How do you know that you're not improving? Well, you need to keep a track record, and essentially that's what a trading journal is. It's you tracking everything that you're doing, right? I personally track my morning routine. I track my processes, I track my approach, I track the music I listen to when I'm doing things. I'm actually tracking a lot of different things, and I didn't realize that I was tracking it, but then when I was tracking it, I was able to replicate it. And that's one thing, that by replicating that, I was enabling myself to get into a certain state of mind that enabled me to make more money. Just a prime example. Over leveraging. So if you're trading a personal account and you're not funded or anything, they can give you some pretty serious leverage. And what a lot of people do is, rather than keeping their risk at 1%, they might even trade 0.5% risk, right? In the example of the $100,000, they might be trading with the $500, but they're not actually risking 500 because they'll open up 4 positions. So they'll lie to themselves in a way, and they'll actually be trading $2,000 risk across 5 different trades, but they're all $500 each. By over leveraging, you open up yourself to more risk of losing your capital and blowing your account in a very short span of time. You have to be in more of an abundance mindset and understand there's going to be loads of trades, there's loads of days to trade. Some days you might be trading off emotion, you might have taken a sequence of losses. Why are you still trading? By having certain rules in place, you're going to be able to mitigate against a lot of these things and learn from them, which is more important. Focusing on short-term gains, one of the most hardest things for newer traders to get over. They need to see the long-term perspective. Where are they going with their trading? What is the strategy that they're trading? Is it going to benefit them long-term? Is it something sustainable? Why are they being so reckless in their behavior? If they're not tracking their emotions, they're not tracking their risk management, they're over trading, and they're not tracking all this stuff, they won't be able to understand, and they'll just be all over the place. So you have to really take this seriously. It's not a case of just jumping on and making money, right? And if you think it's going to be that easy, then you need to think again, because yeah, sure, you can click a button and make some money, but can you sustainably click that button? Like, that's ego telling you that you can do that, because really and truly, I've been on both sides of the spectrum, and I don't know anybody that can sustainably, consistently make money without looking over these things. Ignoring economic data, I think that is one as well. Like, listen, there's news in the market that makes volatility come in. Be aware when the news is coming, what news is high impact. There's something called an economic calendar. Every broker, every trading broker's website, platforms, they all have an economical calendar. You need to check that, check the high impact news, and know which news you need to stay clear from. And if you don't know what news, you can go and see when the last piece of news came back, and you can go and backtrack it and see how the market responded to it. If you're in a rush mindset, you're gonna avoid doing things like this. And the thing is, if you want to be good, you need to go off and check these things so that you're more aware. You only need to check it once. You might see that every first Friday of the month, there's some news called non-farming payrolls, which is an American employment news. And you notice that the price just goes extremely wild on that particular day. I don't want to trade when that news comes out. Personally, I don't trade when that news comes out. Why? Because the price is so erratic, and it goes up and down, and it doesn't really go anywhere. It just goes up and down. Sure, you can make some money on it, but you can lose a lot of money at the same time. Do I want to open myself up to that risk? Especially if I'm trading my own personal $100,000, and I know if I even put a $500 risk trade on it, there's a slight chance I could actually lose more than that because of the volatility. So that opens up another great question there is, can you lose more than your stop loss? And the answer is yes. There's something called slippage, and slippage is where you might put your stop loss on a certain level at a certain price value, which is your standard $500, but for whatever reason the price got volatile because of the news and price spiked through it. Your stop loss was here and price went through. When price went through, you didn't get taken out your $500, you got taken out at, let's say, 720, where you incurred almost half additional loss on top of your stop loss. It's possible. Some brokers do offer a guaranteed stop loss as well. You do have to pay a slightly more commission for it, but just want to kind of point out. Timelines can be good and they can be bad, especially when you're in when you're trading in the earlier days. A lot of people think they're going to be millionaires and so forth in their first year. Look, it's not impossible, but at the same time, it's highly not likely at all. The truth is, it's going to take time. You need to learn a lot of things. You need to fix a lot of things about your abilities. Depending on the background you come from, if you're an engineer or you're a full-time poker player or something on those lines, you may have already learned certain things about risk management and overplaying your hand and certain things, chasing your losses and this and that. You might have learned those things, and they might be translatable into trading, which will enable you to be a better trader. But a lot of the time, a lot of us, we haven't been taught these things, so we need to learn them, and then we need to build processes in place and then rules to mitigate against making certain mistakes. So just wanted to kind of make that very clear, that it's less about chasing and it's more about doing the right things that are going to eventually get you to where you need to be. You gain more experience from doing the right things than doing the wrong things. The next slide here is resources for further learning. So there is a huge amount of resources online, and I'll be honest with you, the best resources are not free. That is the truth. If you're coming into trading thinking, okay, I'm ready, I'm going to invest some money into my account, but I want to get everything else for free, you've got the complete wrong mindset. I get it. Look, at the end of the day, I'm Asian. I know a lot of Asian people want things for free, but nothing in life is free. And at the same time, if you got it for free, you're not going to use it as well. And you need to understand that. If you're looking for books, buy the physical book, sit there and actually read it. You paid for it, you're more likely to read it. A community of people trading the same strategy as you is so powerful, honestly. I never had community in my first couple of years of trading, but when I did join a trading community, that's when things actually began to change for me massively, because I was able to reach out and ask questions which were strategy specific, and I was able to get very productive answers from people that were in a place that I wanted to be in. A trading course, as mentioned with forex gurus and stuff, you need to be very careful with it, but there is very good trading courses out there. If you're looking for a trading course out there, I'm not going to go and recommend anything to you, because I don't know what you're actually looking for in trading, because some people may be looking for longer term investments, swing trading, this and that. So I don't want to take that away from you and stop you from finding the community that fits you, but truthfully, there is really good trading communities out there. And if you're just really in between and you can't get past this section, you can reach out to me and I'll be more than happy to talk about some of the communities that the one that I'm in, but also other ones that I've seen over a period of time, but I can't vouch for them. But I've seen the success, I've seen how the strategy works to an extent, and I'm almost certain that it's fully legitimate. But like I said, do your own research and look for what you need to look for. Leveraging your community is massive. Having a mentor you can follow who's in the place you want to be in, you can just listen and do what they say and you'll get to where you need to be. Community is a massive part of growth. You get accountability, motivation, you can share your trading ideas. It costs money, yes, it does, but truthfully, money is something that can be made. Anyone in every position in any part of the world can make the money. I don't know anybody in a community and stayed in a community that is already wealthy. You don't need to be wealthy to be in a community, you just need to work your ass off. I know somebody who told me a story about how they washed cars. They finished university, didn't have money, and they washed cars. It's a perfect example of somebody who worked really hard to get what they wanted. You're leveraging your job or a way of getting money to then do something. I'll be honest with you, if I was in your position, I would just be a painter. I'll be honest with you, I would just go to people, I'll put out ads and I will paint people's houses. It will give me the flexibility to listen and learn to trade, and then obviously spend my day painting walls and stuff, but then I have the flexibility to use my phone and whatnot. So just like I said, it's up to anyone. And if you're just using trading to leverage to make more money whilst you're pursuing your education, your degree, whatever, it really and truly, trading doesn't take a huge amount of time away from you in your life. You have a lot of time already, it's just you may not be utilizing it in the best way possible. And final point here on this section is journey. This is your trading journey, so you need to be confident in yourself that you're going to do what you need to do to get to where you need to get to, and having these things in place will help you get there. Investing in your psychology with books, investing in your community and your course due to the mentor and all of that stuff, that's going to help you with the technical side. And the most important thing is you're going to save time during this process. You're going to save so much time that is invaluable in itself. Honestly, the amount of time that you save from just being a part of a place where you can ask the right question and get a very intelligent answer is more valuable than anything. And a lot of the time, I'll be honest with you, when I first began trading, courses were like 5, 6, 7 grand, 3, 4 grand, call it 5 grand for 2-3 days. Nowadays you can actually get into courses for a couple £100 or less, even £100, £200 a month, which is more than enough in my opinion to be in a consistent way of growing. But remember, you're not just joining the community to make the money after 1 month, 2 months. You're looking to get in there long term. You're looking to be a part of something. A community wouldn't be a community if people just came and left. People come, they stay, they grow, they build their money, and then at the same time they make friends, and in the end of it they become a really good community. And that's what community is about, helping each other's grow together and building dreams. So we'll come to the end of this presentation. It was pretty short and straight to the point, but I think there was some very valuable things that needed to be mentioned. And I think when it comes down to trading, just to summarize this, it really comes down to the person. and it's really up to you what you decide to do. Trading can be easy and trading can be hard. It's however you project it to be. Understanding it at first, like anything, it's going to take you a little bit of time. You're going to lose a bit of money, but it's going to be chump change compared to what you're going to make in the future if you pull through and you say it's consistent and sustainable, but you have to see it as a long-term plan. Don't see it short-term, you need to see it long-term. You need to see that, look, it's going to happen. It could take me 3 years, it could take me 5 years, but I'm going to stick at it and I'm going to make it work. But I'm going to make it work because I'm around people that are also working their arse off as much as I am. Put yourself in a winning position and you'll get to a winning position, right? There's so much to it. Listen, if you enjoyed this video, feel free to subscribe, like, share it, drop a comment. You can always reach out to me on Instagram. Be more than happy to get back to you. If there's anything you're struggling with, I can try to direct you in the right direction, or make a video, or even send you, we can jump on a call or something, just so I can help you in any way. More than happy to do that with anybody. At the end of the day, trading's not difficult. You make it difficult. Trading is very, very simple and very straightforward. You just need to start with the beginning, get your head around it. Once you understand it and you found your resources, your tools, and you know how to use them, then you can just literally start your journey. And when your journey begins, honestly, it's going to be the best thing ever. So guys, I hope you enjoyed this video. I hope you found it very useful. If you have any questions or if there's anything else that I can help with, I'll be more than happy to do so. Have a great day, have a great week, and I'll catch you guys in the future.